African mobility fintech firm Move has secured a $10 million financing facility. Move is an Uber vehicle supply partner. The funding was attained through NBK Capital Partners Mezzanine Fund 2. Move will use the funding to highlight the opportunity for the platform to address the continent's vehicle financing gap. Lots of African tech racing news there. Mayowa Ige, analyst at Financial Derivatives Company Limited, joins us to discuss further. Mayowa, good afternoon. You're welcome. Thanks for joining us. So, Nestcoin, Move, Northskin, Alt School. Tell us about the business models of these four firms.
Well, these first, I'd like to say thank you for having me before I
forget that. Of course.
So these companies are startups that are trying to address a need or a gap in the Nigerian space and even African space. We look at Move, for instance. They looked at it and realized that about only 5% or 6% of vehicle buyers buy new cars in Nigeria compared to like 92 in Europe. And then they're trying to address that market. What's the reason why people do not buy new cars and end up buying used cars? Finance is the major thing. But then they looked at it from the angle of creating employment. So they are more tailored towards the car hailing services like the Uber and the likes, so they can create a source of employment for people. And unlike the banks that give high interest rates of 20 to 25% to people when they want to get loans to buy vehicles, Move is only giving about between 8 to 13%, which makes it more affordable for the drivers, and they can pay for over 4 years. So they're trying to address a need. They saw a gap. They're trying to address that. We look at Alt School. I particularly like that one because in this environment, we think we need to go to the university before we can make something out of life. And then the world is now a global village. Tech is the new oil, if we say. Everyone, it's easy to go into software development. You don't have to go into the university to learn that. And Alt School is creating a platform where, with your high school diploma, you can actually learn software development, product management, learn the blockchain, how to analyze data, and then you can get jobs remotely and earn a living for yourself. And that would even help the Nigerian economy. And Northskin, yeah. So
Interesting name, yeah.
We have a lot of VC funding, raising and all of that. Before we see more of the founders going to Silicon Valley to pitch their products and try to they try to educate the VC companies on what it means to the African context of business, right? So when you look at these companies, they don't have that African knowledge.
Yep.
But then venture capital funding, it's not only about the finance, it's also about the managerial and technical assistance. So there's that gap. If you are the one educating them, how well can they now assist you in terms of managerial and technical aspects of it? So Northskin is trying to address that gap, which I think is a very great thing. So they're all doing very unique things in their own way, trying to contribute to the Nigerian economy and even Africa at large.
Great stuff. With the focus of global venture capital firms on Africa, on Nigeria, what's drawing them? Is it potential and their dollars as well?
Well, look at it. Africa is the next growth frontier. Nigeria is the strongest economy in Nigeria with 200 million people. It's understandable why. We look at it, we have the highest number of startups in Africa. Why do we have this? We have, number one, we have a growing youth population. Over 50% of our population is youth. We have a population growth rate of about 2.5%, which is showing there's a market. Then we also have increasing internet and smartphone penetration. I think we have about only 41%. We have over 50% internet penetration now. And then there's also the fact that we still have untapped market. If you look at the insurance space, for instance, it's only been 1% penetration really in that space. We still have the unbanked, about 41%. I think they said about last year, about 20 trillion naira or something of cash in circulation, not through the official banking system.
Yeah.
That is a huge market. There's still a lot of challenges that these startups are trying to address. So it's obviously a market. So you can see why VCs are looking at Nigeria, because there's potential. There's vast potential in Nigeria.
Well, what about the basis for their valuations? That's been a sticky point there, yeah.
Unlike mature companies where you can tell this is the profits, this is the cash flow, Startups, you can't really tell because sometimes some of in the early rounds, they don't even have a product take. Some of them is the MVP, minimum viable product they have. So you can't really, and even the revenues are unstable. So you can't use the valuation methods that the mature companies will use, like the discounted cash flow. So these companies have to come up with other methods, and then they have their criteria for investing in these companies. Some of their key considerations are: number one, they look at their management. They want to see a company that has a solid management with experienced managers. Even their team should be experienced people, because a business will only be as successful as its leader, right? Then two, they also look at the market, the addressable market. Is there a market for this product that this company has come up with, right? If we say, if the market is large, you know that somehow, even if you're getting 3% or 5% of that market, you're going to be earning millions of naira, and that is good for them. They also look at the product in itself. Is it a competitive product, or is it a product? Is it a saturated aspect of the market, right? Is it something that is new, or is it something that they are bringing a new aspect or a new spin to the already existing product? And then also they also assess the risk involved. Okay, if we have to exit, what's the exit plan? Is it possible? So they consider these things. And some of them also do this market comparable method of valuation. You know, in real estate, where you look at similar properties and just adjust according to space.
Right,
they do that kind of thing because they have platforms such as PitchBook that have figures on recent valuations of similar companies and on the same round and same industry. So they kind of take that valuation and then adjust it for what they have, apply the multiples to see what the potential exit would exit value would possibly be. So they do some of these things, but I think that it's largely subjective, not and dependent on them and how they look at it.
Really quickly, any risks for VCs and these startups as far as this fundraising is concerned?
A major risk we look at, especially when we look at where we are in Nigeria: political risk, economic risk. The political environment is a lot of times, and economic environment is unstable. Look at what happened to Gokada and OPay. All of a sudden, the Lagos state government came up with the ban on, and that was the end of it. So that is a huge risk. But I think that they already, like the VCs know, it's a rule of thumb that 2 out of 10 or 3 or 4 out of 10 startups that you invest in will fail. Another 2 or 3 would probably give little money, or they'll just pay you. You only be able to recoup your initial capital, and then only 1 or 2 would actually be successful. So these are things that these risks, they factor it into their evaluations and before going into the investment.
Very quickly, do you see more of these announcements as the year progresses?
Well, I think that because we're entering an election season, I feel like VCs might want to adopt a wait-and-see approach to see how things play out. And if you look at it, there's an alternative. Interest rates are increasing in the US. They may want to invest in that while they see how things play out in Nigeria before continuing investing more in our companies. Because you know the way we work, one government has this policy, a new government comes in and comes up with its own policy. So that instability may actually reduce what we see in the short term.
All right, it's a very, very fascinating space, and I appreciate you coming in to talk to us about it. Maiwa Ige, analyst with Financial Derivatives Company Limited. Thank you so much.